With me today I have Lieven Debruyne, CEO of Schroder's Hong Kong. Now, welcome Lieven. You have just come off a panel where you've been discussing the role of mutual funds in the long-term development of the Asian industry. And I have to say, I came away feeling a bit confused because nobody really was able to pinpoint anything specific. We pinpointed lots of issues. The fact that mutual funds are not really used by a middle-class segment in Asia. We pinpointed the short-term trading mentality. So, in your view, what needs to be done to resolve those issues?
Well, I think, first of all, let's be clear that if you ask about, what's the outlook for mutual funds, we're actually very, very positive. I think the fact of the matter is that we are part of the world where the wealth management as an industry is going to continue to grow very, very fast. And we know that the mutual funds, as a percentage of people's wealth, or the way they kind of save their wealth, is very, very low. So you just add those two up and the future is very bright. Now, the point is, how do we get that percentage that mutual funds have in people's savings up? And I think that's a matter of as we said, expanding the number of people that use mutual funds and the ones that are using mutual funds to see if we can increase the longevity. Because one of the things that you see happening is that actually sales in mutual funds are quite high. But the growth in assets aren't that high because people trade a lot. So, where I sell one fund on the one hand, perhaps I lose the assets on the other side because people are selling it. So the answer then is, you expand the people that buy mutual funds, the ones that are buying mutual funds, that you're trying to see if you can educate them in a way that they start using mutual funds a little bit more as longer-term savings rather than just short-term trading. Now, the fact that there's short-term trading mentality and that a lot of people will continue to use mutual funds to make a short-term return, there's nothing wrong with that, but it's just a matter of expanding that. The other thing I would say is that something that doesn't really exist enough and where we will see developments is on the pension side, on the defined contribution, where mutual funds can play a very important role in developing that, as well as regular savings plans, and some of the banks are thinking about that. And these developments will happen over time as well. So if you take a little bit of a medium, long-term view, I think it's going to be quite a few ways of achieving it. On the short term, though, the fact of the matter is that we've had a financial crisis. It's hurt people in Asia quite badly. We've had some structured products have very public blow-ups, and that of course has affected people's confidence, and it will take time to get through that with the regulatory changes, the way mutual funds can be sold. That has a bit of an impact that needs to bed down. So short term it might still be a little bit challenging, but beyond that I think we'll get there.
Well, it's interesting because Asiana came up with an interesting survey results. They'd done a survey with the EIU, which showed that 76% of people were happy to invest in stocks, but only 32% were happy to invest in mutual funds. So how do you teach investors about diversification? How do you get that message across?
And to be honest, those statistics don't surprise me. And I think if you would have done the same survey 3 years ago, 4 years ago, before the financial crisis, it would have looked very different, because people were making fantastic returns with their funds, by and large, because almost everybody was buying equity funds, and clearly the markets were doing very well. At the moment, there is a reduced amount of confidence. I think it's about showing that mutual fund products can actually give people very good returns on their investments. Now, again, the Asian markets, and emerging markets, probably more than many others, have had a fantastic recovery since the financial crisis. So again, people made quite good money in stocks. They haven't used mutual funds as much as in the past to get access to this, and they've really, the only mutual funds that have sold in large amounts have been the more high-end fixed or high-return fixed income funds. I think we'll get there again, but given what we've gone through with some of the more structured products, I'm not surprised that the confidence perhaps is still a bit low, but that will go up.
Okay, well, I'm glad you mentioned the crisis, because I want to talk about UCITS, and we heard Jean-Baptiste earlier talking about the development of UCITS and so on. Since the global financial crisis, have we seen the Asian regulators looking at UCITS more closely? Is there now much more focus on perhaps having that Asian passport that we're talking about very loosely, but is there more localization, more greater scrutiny on the more complex instruments in UCITS, and more of a desire to create an Asian passport?
Listen, I think there's obviously much more scrutiny about risk qualification of products, how products are being sold, what products actually do, and how you disclose that. I don't see regulators making a differentiation between UCITS or local funds. I think this is in general across financial products. I don't also see a very strong drive to come up with an alternative to UCITS. I don't think there is an issue with UCITS. There are some regulators that are a bit worried about some of the extended powers under UCITS 3 and the so-called new CITS, and whether these products are suitable for the average investor. And that's fine. But not to the extent that it's saying we need to have an Asian alternative. Now, that doesn't mean to say that an Asian alternative, an Asian fund passport, could be beneficial to the region and could be beneficial to fund managers like ourselves, if that would provide us with new access to markets, and I think that would be one of the crucial things. But there are lots and lots of things we need to overcome before we can get to that. So even if it were to happen, I think it would take a long time. And as a final comment, I think it would really be an alternative to UCITS, not the replacement of UCITS. I think UCITS has such a strong position in the Asian markets, at least in a number of them, that I think that will continue to be the case.
Great, thank you very much.